Everyone, welcome to a Chat with Traders community presentation. This is your host, Ian Cox, and today from New York City, we have Sal Medina, who's also a fellow community member, who would like to share with us his 14-year journey in the financial markets. And so, Sal, welcome to Chat with Traders community.
Thank you. Thank you very much. Thanks for having me.
Yeah. Tell us a little bit about your background. What what attracted you to the financial markets, how you got in?
Yeah, so I pretty much started, I guess, I really didn't know about trading at all. I mean, I knew stock market. That's everybody knows that type of stuff. But I just started off as a computer engineer. I was a computer systems engineer. And one day I was just thinking to myself, well, thinking of other income ideas, or, when I was on the train and trying to think of different ways of earning income. Nothing major, but things kind of turned around when I ended up working at the Credit Suisse in Madison Avenue, if everybody's familiar with that. And that was my first exposure to the trading floor there. Obviously, it had nothing to do with finance, but it was more of like supporting traders there and their systems. And I was intrigued by it. And then I was put into, oh, by the way, this was in 2007, going into 2008. So and then they took me out of there and transferred me over to another bank called Royal Bank of Canada, or known as RBC Capital Markets. And this was I was going to be on the trading floor. And once, of course, around that time, there was the whole financial market, the whole, financial collapse, Lehman Brothers, Bear Stearns, and all that stuff was going down. And I was on the trading floor with so much, commotion going on. I had no idea what was going on. But for me, it was just like, okay, I see these people yelling over here, these people yelling over there, and of course you have CNBC, all over the trading floor. And that's kind of where my kind of like being intrigued into the financial market started. And I opened, of course, I didn't know where to go, what to do at all. All I knew was markets going up and down. And I opened up an account with Scott Trade, which was back then with the brokerage to trade stocks. And that's where I started getting into trading back in 2008. And yeah, just where the journey started. That's where I started just hitting buy and sell, not knowing anything at all. But those two buttons were, the only thing I knew, and then things progressed from there. And that's how I got into the markets.
Oh, great. And so when you first started getting in, had the crash occurred yet, or was it just early 2008?
I think this was, I think Bear Stearns had already gone down, and then Lehman Brothers, because I remember I had an account with Washington Mutual, and then there was a whole time when Chase was buying them up and all this stuff going down. So it was towards, I would say, about September of 2008, going towards the end of the year. Yeah, so things were pretty hectic then.
So did you have any friends or colleagues that were trading that you communicated with to get stock ideas or strategies?
Oh yeah, absolutely. On the trading floor, all the all of us on the server team, tech team, we were always, back and forth on sharing ideas on what stocks to trade, or of course, they probably knew more than me, because they were more involved in the markets for a longer time. But as far as me, yeah, we didn't know anything. I still remember the first time I bought anything was one share of Goldman Sachs. I still have that printout of that one share. That's the first trade I ever made. And of course I lost money, but I was just like, okay, that's just the nature of trading. And that's where things just started going for me. So yeah, that was just one share of Goldman Sachs, and that was when the first time I got involved.
So as the 2008 crisis unfolded, what did you pick up from your friends and colleagues, and how was that kind of emotional turbulence that you were surrounded by?
It was exciting, but it was more of a curiosity. What the hell is going on? I see back then Federal Reserve Chairman Bernanke was always on the news. And I was just trying to communicate with everybody else, like, what's going on? You know, is for me, since I started trading in around that time, I thought that was normal. So I
Mhm.
had no idea of, a stable market or anything. I thought this is how trading was.
Mm.
So, uh, of course, my colleagues were talking about buying the dip because things were falling so much. I was like, oh, just buy as much as you can. So I didn't have a huge amount of money, but that's what I knew, and that's what they were communicating to me. So I had this impression in my head that this is how the markets are. And it just got me really, pumped up to be involved in the markets, even though I didn't know what was going on. But that was like the big thing, trying to
Uh-huh.
buy the dip, so to speak.
Yeah. So did you approach the market more from kind of a buy and hold mentality?
No, no, I didn't know any rules. There's
Uh-huh.
a pattern day trading rule, right?
Hmm.
So you can't go, a certain consecutive amount. So I was just trying to buy in and out, the same day. So of course I got flagged for the pattern day trading rule, but I had no idea of a long-term perspective. It was
Hmm.
all get in the morning as soon as the market opens, see what's there to buy if I can buy anything, and then get out at midday or something like that. So it was more of a day trading in and out type of approach at first.
Hmm. Yeah. And so how did the next year go for you? How
Yeah,
during and after the GFC?
yeah. So after that, I mean, a ton of people got laid off, including myself, in the beginning of 2009, and had some money saved up, and I was like, okay, you know what? I got laid off, and as weird as it sounds, I was actually kind of happy because
Mm.
I was like, damn, this is everything's all messed up right now, but you know what? This gives me an opportunity to trade. I can wake up in the
Mhm.
morning. I don't have to go to work, so let me, look at the charts, and I would be up at 6 in the morning looking at pre-market, see what's going on. And so yeah, I didn't go back to work right away. I had some money stashed away, so I said, and I kind of went to the extreme. I had a vehicle at the time. I had some jewelry that was worth a good amount of money, and I sold that stuff just to keep me going, and putting some money into the trading account. And every single day, I was on this forum called Hot Stock Market. It doesn't exist anymore,
Mhm.
but back then it was like the thing to get on and share charts. And I was learning from other traders that were more experienced, and this is when I started getting exposed to indicators, right? Stochastics, RSI. What does this mean? How do I use it? How would these guys be able to predict the different movements? And that's where it really took off, because I was extremely intrigued and thinking that there's some type of perfect strategy or indicator that if I just get this one thing right, I can be like them. And that was me most of 2009, and it transitioned off into Forex. That's I was so addicted to trading that I wanted a 24-hour market. And
Hmm.
that's what really pushed me into the Forex market, because I remember a colleague, when I worked at the bank, he told me about Forex. I wasn't familiar with that. And he said, well, it's a 24-hour market. You have to wait till
Mhm.
market close, market opens. And
Mhm.
that kind of pushed me into that realm. And that was most of 2009.
Interesting. So, some argue that the currency markets have less opportunity because you only have a few currencies to trade with, whereas the stock market, you have thousands of different companies, and you got interesting stories there and more opportunities for inefficiencies. Did you have any opinion view on that early on, or even now?
No, I kind of had that mindset as well. I'm thinking if there's more stocks, there's more opportunity. But
Mhm.
the once I went into Forex, I was like, okay, well, maybe uh, there's still a good amount of lists, pairs to trade, but I figured, hey, you know what? Maybe I can trade five or six pairs, and that'll be just as good. And yeah, I did have that in the beginning, but I got used to just trading like a few and trying to, figure out the pairs, right? And how they react. And, over time, I developed more of kind of like a simplified thinking, where if I trade maybe four or five, that would be better than trying to sort through hundreds of
Hmm.
stocks. So yeah, I mean, I kind of developed from there instead of looking at so many different things and then going on to try to simplify the outlook and things to trade.
Hmm. So did you pay much attention to what was going on news-wise in the foreign currency markets, or were you just purely a technician? You could care less what was going on, just simply the charts enough were interesting enough for you?
In the beginning, it was a little bit of both.
Hmm.
Um, so I know there's so many different viewpoints on trading, and a lot of them is not necessarily wrong or right. Everybody has their own viewpoint on what information they deem as valuable to them to make a trading decision. So at the start, I had I forgot what software it was, but I did have on the side it's streaming um market data coming out where it give me information and news that would come out in the morning. But over time, yeah, I moved away from that, and it was just strictly on the charts. And then what I
Hmm.
found was that the the charts kind of tell you the story already. You just need to be able to interpret what the market's telling you, right? Because it's straight price action. So if it once I started seeing that, and I started kind of leaning towards chart patterns, that's where I kind of like, okay, you know what? I don't need to focus too much on the news. I'm just going to focus on the chart and see what the market tells me there, and I'll make my decisions off of that. I still pay attention to the FOMC, like really major news, but just to give me a heads up of the volatility is coming down the pipe and stuff like that. But other than that, I just focus more on the price action on the chart.
Hmm. I see. So can you show us a little bit about your charts and kind of what you look at? And now you've been trading currencies since what, 2000,
I would say 2010.
2010? Wow.
Yeah.
So you've been focused just on FX for the last 12, 13 years or thereabouts.
Yeah. Yeah.
Wow,
The only
great.
only only Forex.
Hmm.
Yep.
What pairs do you focus in on?
So so again, I've evolved so much over time,
Hmm.
but I found that the best way, at least for me, was just to focus on one thing. And now I just focus only on the Euro USD. It sounds boring. It
Hmm.
sounds like there's no opportunity.
Hmm.
You have to wait, but it just simplifies everything so much. Like if you're focusing on the Euro USD alone, it it, it kind of like forces you to be patient and wait for the opportunities instead of going through all these different pairs. And you say, okay, this might be an opportunity here, there might be an opportunity here, and then you kind of get sucked into all these different uh outlooks, right? Because sometimes people get confused on the correlation aspect, right? And they say, oh well, this looks like it's going to go up or down, but what about this? And they try to like compare, and I just try to avoid all that by just focusing, zeroing on the Euro USD, which is the most uh popular and main pair out of in Forex.
Hmm.
It just simplifies everything tremendously.
Right. So you started off telling us that you were into day trading in the beginning, and the title for the presentation today is referring to swing trading. Did you transition from a strictly day trading approach to kind of a more swing trading approach over the years?
Yeah, absolutely.
Hmm.
It was like a slow, you know, uh, um, progression, because I started
Hmm.
off with uh, day trading,
Hmm.
and then I moved over to the hourly charts. And it's so crazy to think about, because back then I was thinking, like, man, the 4 hour chart, that seems like it's long term. And in my mind, I'm thinking to myself, okay, a 4 hour chart, man, now I really have to wait for this opportunity. And so it did go from the lower, time frames, and then it went into the hourlies. And then finally I started thinking to myself, I think it was a book. I think it was Reminiscence of a Stock Operator. I kind of got an idea from that book. I read it from beginning to end, and I said, you know what? I think maybe it's better, more important to capture the big moves
Hmm.
of whatever market. It doesn't have to be just Forex, but just in general. And that's when I really started seeing the light and saying, okay, you know what? Now for me, the daily chart is kind of like, it's not short term, but it's more of a I don't know. It's not, again, it's not short term, but for me, it's like the base of what I look at, because I look at the daily chart, but I also look at the weekly, the monthly, and I even look at a quarterly chart
Mhm.
for a very a longer term perspective. But yeah, I'm a big believer in swing trading. I believe it's much beneficial to capture swings of moves where it's going to give you, 200, 4, 5, maybe even up to 800, 1,000 pips on a move, and all you have to do is manage that trade, and see it through its progression, and just let it run.
Mhm. When you mention up to say 1,000 pips, translate that for us in rough percentage terms.
Well, it depends on the account size and the type of
Right.
position
Mhm.
that they're using. So let's say a standard lot
Mhm.
would equate to $10 per pip.
Mhm.
That would be a $10,000 profit on that trade. So
Mhm.
yeah, in terms of percentage, it really depends if somebody has a smaller account, a larger account. But I look at it that way, like for standard lots, that would be a $10,000 move on that specific.
Mhm. Yeah, and would you how would you differentiate the mindset from a day trader to a swing trader? And was there a change inside your mindset?
Yeah, I think it comes down to see, it's so everybody's different, right? And how they can read
Mhm.
the market. I'm not against day trading. I
Mhm.
feel like there's some people who say, okay, I want to be in and out of the market on that same day, or I don't want to hold more than 2 days, 3 days at a time. And that's perfectly fine if it works for them. They have a system, and they also have the psychological and emotional control for that. But I believe that for the majority of trying to, especially people that don't have a lot of time to be on the screen to look at charts all the time, what swing trading can do is give you the mindset of preparation and being able to capture and move if you have, a job, or if you have a business, or you have other things to attend to. You can look at the market from time to time and say, okay, there's preparation here that the market looks like it's going to move X amount up or X amount down, and it kind of like relieves a lot of the pressure having to be in the market out trying to make X amount of dollars, right? Because everybody's looking at the X amount. How much can I make per day? How much can I make per week, and so forth? Where I feel that having an approach of swing trading approach, or a bit more of a business approach, is how, what are numbers going to be like per quarter, right? Look,
Mhm.
if you split up in four, relieves the pressure of having to make X amount per day, X amount per week, or even X amount per month. So I look at it that way, and I feel like it kind of slows the pace down for a lot of people, and take advantage in of market moves, and not having to feel like they have to make a trade per every single day, and that type of mindset.
Mhm. Mhm. Great. Yeah, if you we'd love to see some of your charts that you have, and if
Yeah,
you could
sure.
share with us.
Let's see, how can I trade this here? I take a screen share, right?
Mhm.
See if I'm how to do this. I'm not perfect on okay. Let's see. Okay, just give me 1 second.
Mhm.
Okay, can everybody see
Yes,
this over here?
you're right.
Okay. Is it clear?
It is for me. Yep.
Okay. Okay, so this is a basic it's a Euro USD daily chart.
Mhm.
Okay, and I'm gonna give away so-called free game here, but it really puts things in perspective when I'm talking about a swing trading, and how do I view longer term charts, right? So
Mhm.
one of the first things I try to look for is, I want to be able to spot different moves. Like, why this level up here, okay, this is an obvious resistance zone, this is an obvious support zone, this here obvious support zone here. What I started doing is, instead of looking at these little swings, I started looking for different levels that I don't necessarily have to draw. I know one of the main things now is drawing out structure, where you're going to draw out resistance levels, support zones on your own. But I use something called, sorry, pivot points that kind of draw the levels out for me. And so if I'll put this on the chart now. So if you guys can see that here, you guys see that?
I see horizontal line at the top and horizontal line at the
Yeah.
bottom. Right.
So this is a main pivot point, right? This is if anybody's familiar with pivot points, this kind of draws out for you. Now I know it's very long, and the reason it's drawn out that way is because instead of using the traditional daily, weekly, or monthly pivot points, I moved over to higher, to weekly, I'm sorry, to yearly, and a 10-year outlook on pivot points. So this kind of gives me the perspective on where the market's likely to find resistance and where is it likely to find support. Now, it doesn't end there. Once I have the pivot point and the support zone, in my mind, I was thinking to myself, well, there has to be something in here, in this whole area. Like what happens here? I was kind of confused on where the market's looking to support or resistance in between these levels. So what I did was, or I actually learned from a trader many years ago, I think this was about 2011, when it came to pivot points, there's something called median levels in between these zones that kind of give you an idea of where the market can bounce. Because one of the top things is, people talk about, well, if you go short around a pivot level, the next level for you to find to trade to would be the next support, or it's called support 1. So in between these levels, there's something called median levels, which is right in the middle. And if I put that on now, I'll show you 1 second. No, it's this one right here. Now this is manually drawn out because TradingView doesn't offer this within the charting platform. So I kind of have to draw this out and calculate from here to here and come up to a 50% level. But you can even see how these levels are respected. So if you're looking for a swing trade and we're looking for these zones here, this kind of gives you an indication of where you want to get long or short, and give you an idea of where you want to target on the next zone. So I don't.
Quick question here on the horizontal line at the top and the one at the very bottom.
Mm-hmm.
Did you enter those, or did the system say that's where the horizontal lines are, resistance and support?
Yeah, the system automatically does it.
I see. So I noticed down at the bottom, though, there seems to be a decent distance from the very bottom of the chart to the bottom line support zone. How did it calculate that and the top resistance zone? Because I see it blew past the resistance on the top pivot point. Yeah.
Over here?
Yeah.
Okay, so we're looking at zones. That's why just like a support and resistance level that you would draw on your own, market's not going to stop on a dime, since there's a lot of fluctuation. It's just kind of give you a perspective where this, if it's moving up in this zone and it's coming back below it, it's not going to stop on a dime. So we want to tend to look at these as more zones. That's why I kind of draw a box around it like this. So
okay.
You see what I'm saying? So we want to look at this as more as zones. Sometimes the market does stop on a dime, but I don't look at that. I don't think that's going to happen all the time. That's kind of be a more rare occurrence.
I see. So these two horizontal lines, are they calculated based on the chart data that we see here on screen, or does it take into consideration data going back many months or years prior to, like on the left-hand side of the chart that we can't see, the portion that we can't see yet? Yeah, if we just keep going back, is it taking that? I see. So it's taking that data into consideration.
So just like you would calculate, I guess people would equate pivot points as old school. Back in the day before charts, traders would calculate the previous high, low, open and close to calculate what are going to be the next day's pivot point levels. So since these are 10-year pivot zones, it's going to calculate every 10 years.
Oh, got it. Got
Yeah. So this back right over here is the start of the new 2020, the start of the new decade. So this is
Mhm.
why it stops here and it comes on to going forward.
Got it.
Yeah. So these levels I use as kind of like a map on the chart, and it gives me an idea of where I want to look to, where the market may find support, where it may find resistance. In this case here, also there's a resistance zone. So
Mhm.
when the market starts coming below it, that gives me an indication that the market's going to go lower. And I'm actually in a trade now that's holding right now about almost 200 pips from this level here. So it really helps simplify. Instead of having to draw it myself, I let the market do it for me, and all I have to do is just follow the price action to it.
Mhm. Got it. I noticed that I don't see any volume bars on the bottom. Is that intentional? Or I mean, do you use volume? Or I mean, do foreign FX currency traders use volume frequently or not?
Um, they give you an option to trade volume, but I don't look at the volume. Down here,
Mhm.
all I have is a MACD indicator.
Mhm.
I'm very big on divergences. I may be a little biased towards it because it has worked so well for me, but I feel that the MACD gives one of the best, I guess, leading indications that the market might be stalling or about to reverse.
Mhm.
And if anybody's familiar with pivot points, usually, I'm sorry, not pivot points, MACD divergence. So when the market usually makes a high, let's say this level over here, market makes a high. I'm not looking to go short here because it's not at the pivot zone yet. I know that the market's probably going to try to get up here, so I'll just wait for that. So the market's going to make a new high, which it does. If I look below here, the MACD makes a high, but it tries to get up here. And although price has made a higher high, the MACD is making a lower high potentially. So this kind of gives me a heads up that this market might be getting weaker and it's going to likely pull back. So I kind of use it's not just the pivot points, but I use everything intertwined together to give me an idea of where the market might reverse or continue in that direction.
Mhm. Yeah, I noticed that the time frames look to be fairly long here. How long do you typically hold your position, ideally?
And that can vary. It can
Mhm.
be anywhere from a week to as many as 2, maybe even 3 months sometimes. If
Mhm.
if the market's trending to a certain level, I will hold it as long as I can. Um, I took a trade. This was back in 2020, but I took a trade somewhere down here, and in between these levels, I was just holding it and until it started reaching a certain point up here. Now, not every trade is going to be that perfect, but that's mostly what I look for. I'm looking for, as long as the market's giving me the direction that I want to go, I will continue holding it and adjust my stop losses.
Mhm. Uh, can you show us some of your other support and resistance lines in between those pivot points that you were talking about?
Oh, in between these levels here, right?
Yeah,
So this
right.
so this is a median level. In between
Mhm.
this main pivot point and the S1 pivot level, there, I don't know if you can you see this line, this dotted line
The
here?
dash line, yeah. Uh-huh.
Yeah. So that is 50% between this level and this level. The
Mhm.
market usually is not going to make a straight direct move, although sometimes it can happen, but we need to account for levels right in between it. And which is called a median level. Basically what it is, it's the mid level in between this top and this bottom. So in between these two levels, this one here and this one here, because there's such a big gap, there's also other median levels that to look for. So if I can put those up here, um, I already have these pre-drawn out. This also, so I kind of have in between these two levels, support one and the main pivot point, I have 3 levels to look for. Now, if I zoom in, you can see there's finding support here. There was no pullback. Once we got over this level right over here, I knew that the market was going to try to get back here. So if I get in short, let's say somewhere here, my next take profit would be this level right over here. And you can see how the market respects this level, these levels. Now, this is perfect, but it's not always going to be that way. But the market finds resistance here, and then my next level would be this next median level here. Does that make sense, or it's still?
Yeah. So how do you, I mean, are you identifying those levels visually for this particular chart, or is it based on a certain percentage or ratio?
Yeah, well, 50%
Oh,
ratio.
50% retracement, right?
Yeah,
Or
so
50, okay.
the way, since TradingView doesn't give me the option to put median levels automatically, I have to do it myself. So what I do is I kind of like was trying to calculate it myself, but I started using the Fibonacci tool to help me see where those 50% levels are. So for example, I'll take the start of a Fibonacci here, and I'll draw it all the way here to the next main support one. And you can see how there's 50%. So that's where I'll manually put the line. Okay, so this is 50%. And I'll do the same thing between this level, median level, and the main pivot point. I'll use the Fibonacci to give me 50%. And you can see it's right around this area. So I do use the Fibonacci tool to calculate what's 50% in between these zones. I don't know if that clarifies something. I know it might be a little confusing, but I do use the Fibonacci tool to give me a kind of like a 50% in between these levels.
I see. I see. So right now, so give us an example. You mentioned 1,000 pips. What would 1,000 pips show up as on the chart there? I mean, what kind of move are we talking about on this?
So yeah, so this would be this area here. This is around COVID, but maybe around this level here, up here would be, well, it's a little over 1,000. But
Okay.
From this point to this point would be like about a 1,400 pip move. Yeah, so these are big, wide areas to trade from. And the reason why I took a long here and was looking for this zone to take profit is because of chart patterns. I know I haven't gotten into that yet, but chart patterns kind of give me the indication of a market move. So I can even draw that for you on the reason why I was looking for this move. Now, this is the reason why I was looking for this move to bottom out around here and move up. I know there's a big spike over here, but there was a lot of volatility around COVID. So this is based on that price action. But once it stabilized, you can see it started like finding support, and then it took off all the way to the next zone, all the way up here.
I see. So are you looking to buy upon the breakout of the upper descending trend line?
No, so there's a different approach to trading chart patterns. Mostly the traditional way people try to look for is wait for the breakout. I don't wait for the breakout. I feel like if I want to get long on a specific pattern, such as this one, I want to be able to look for buys as close to the bottom as possible. Because usually if the market breaks out and people start buying up here, the market usually tends to pull back and wipe those traders out or hit their stop losses and then continue in that direction. So I try to buy before that whole breakout and then try to maximize the position that I'm in. So that way I don't have to wait for a breakout and then it pulls back.
Great. Any questions from the audience? Feel free to ask now if you'd like.
Yeah, absolutely. Anybody have any questions? I'm more than happy to explain.
What has the recent news on the weakening US dollar done to your trading and your thinking around playing this? Has that had any effect on this pair?
Oh, so you mean the recent news in terms of the dollar getting stronger?
Well, I feel like the news now is talking about the dollar peaking. Is this the peak?
Oh, so that would be more on the fundamental side, on the news side. I try to not focus too much on the news side. I try to look more into the charts to see if there's any patterns or anything, because I feel like the price action on the chart will tell me what the market's trying to do. as opposed to seeing what's happening on the news, or anything that they're suggesting will kind of like take me off this my viewpoint on the chart. So I try to stick to more of the charting, technical analysis aspect.
We have a question from the audience. So
Yes.
are you purely a swing trader now, or do you both swing trade and day trade, and do you recommend focusing on one over the other?
So I specifically focus on swing trading now.
Mhm.
I don't day trade. Again, I don't have anything against that. People want to day trade, is perfectly fine.
Mhm.
But for me, I like to look for the bigger moves and not be in and out of the market. So if I see a potential 300, 400, 500 pip move
Mhm.
coming, I will look to get into that position and just manage it throughout, the length of that trade.
Mhm. I interviewed a foreign currency trader late last year, and he argued that the so-called smart money actually looks for areas that the stop losses are congregated in, and the size of the stops, size of the positions, and actively will frequently try to hunt those stops to flush them out and have these fake out moves and things like that to try to flush out uh, the most amount of money out of the traders before a major move will begin. Have you noticed anything like that? And how do you place your stops?
Oh, absolutely. That's one of the reasons why I try to stay away from day trading,
Mhm.
and especially around, you know, um, economic news, like the Federal Reserve comes out with with interest rates, or non-farm payrolls, something like that. There's always going to be massive volatility where the market may shoot up a huge amount and then all the way down. It's just, in my opinion, it's just you're just setting yourself up to get whipsawed out.
Mhm.
So this is why I prefer to stick to the longer time. I want to see the longer term view of what the market's going. Even if there's crazy volatility, the market will stabilize and continue in that direction. So this is why I try to stay away from the shorter term huge fluctuations. Um, so I can go over actually a recent trade and how I get into my trades, if you don't
Yes.
mind.
Yes, please do.
So this is a recent trade, and this is going to be more of an advanced thing that I learned from someone many years ago. I don't know if anybody's familiar with the old school daily FX forums. Back then, when it was owned by FXCM, I think they got sold off in 2016 or so. But there was a trader in there who was a master at trend lines, and his entries were so precise that I was just thinking to myself, but how is he doing this? How is he getting in so precise and being able to get in on the most optimal times? So what I would do is study his charts, and I don't think he was withholding information, but he just had a hard time explaining it, until one day I started messing around on the charts and I said, okay, well, this seems like it works. So what I would do is I would look for support and resistance levels um, that were obvious to me. Now it varies across everybody else. If I were to teach this to other people, it's going to take time, it's going to take patience, and also it's going to take screen time and practice, just like anything else. But what I do is, for example, I wanted to go short here, right? I didn't want to go short necessarily because there was a previous support here and this became resistance, although you can look at it that way. But I look to get in at the most precise time, as much as precise as I can get in, right? So if I use the replay tool, I'm going to look to draw a trend line like this. I use the magnet tool. This is my starting point, which is resistance, and I'm going to connect it to the next level of support that I see that I could connect to, which would be here. Okay. And I do have a YouTube channel, so I already had somebody say that you're drawing trend lines wrong. It's not wrong. It's not a traditional way of drawing it. And I'll show you in a second why. So once the market breaks down below this trend line, I'm looking for a pullback for me to get short if the market pulls back. So in this case, I was able to go short. I had a limit order right here at 0788. 1.0788 and get short here. Now, this looks like a perfect entry, and it was in this case. So my stops are usually maybe anywhere between 50 to 100 pips. I like to give a good amount of room for the market to go through up fluctuations just in case.
Mhm.
But and so I went short here, and my next support or take profit level was going to be right around this area here, this previous strong bounce area. So I would hold on to this trade, and even if the market's moving down, you can see the market again is respecting this trend line. So now I know that this trend line is valid. My stops are still protected here. I'm not looking to add anything. This trend line is still valid for me to hold as long as we hold below this. Okay, so once we start moving down, I start, again, this goes back to developing intuition into the market. I start looking at this level as support. So I start looking at drawing another trend line from this starting point to here. And it starts giving me levels to watch for if we break below or we break above. So while I'm holding a short position up here, if we start closing below, the keyword is closing because I don't take trades in the middle of the day. Once the candle closes below this trend line, it gives me the green light to maybe add an additional short. So I just wait. Again, it takes patience because days go by, but I see that the market still is respecting this trend line here. Again, it attempts to break, but it doesn't. So I wait for the candle to close to see what the market's actually trying to do. I move forward again. So once we broke and closed below this trend line here, I put another limit order at 1.0645 to continue down. And the market respected it. And it continued down to this level here. I'm still holding onto this trade for other reasons that the market potentially might go lower. But this is how I get into trades. I use this non-traditional way of using trend lines, but it works tremendously well. And it gives me an idea of if the market closes above this, I know I'm wrong and I get out immediately. Same thing, if the market were to go back up above this trend line, I know that I'm wrong and I get out immediately. So that's how I enter and look for areas to go short or long. I know it might seem a little confusing because it's not the traditional way of looking at trend lines, but it works tremendously well once you practice it and get used to it.
Now, these trend lines, did you say that you kind of develop them yourself, or you learn them from a particular person or group?
Yeah, I learned it from this trader who was in the Daily FX group. He drew a little different, so I did over time tweak it to my own understanding. But that's where I learned it from, and it gives me an idea of where to look at precise entries on support and resistance levels. Like, I'll give you another example. I took a long here at the end of last year, and the reason was because I take my support levels and I draw it out to my resistance levels, and you can see how the market finds support here and write it up. So that's how I look for levels to get in.
I see. Now, what about position sizing? Do you modify your position sizing up or down depending on higher probability setups or average setups, or do you just trade the same amount of contracts each time?
I would be lying if I said I'd been adjust sometimes for trading opportunities that didn't look, high probability. But I try as much as possible to stay, no matter what, to stay in that range of, I'll use as high as a 5% position, and then let the market go from there. It can be very tempting to add additional, lot sizes, but I try as hard as I can to stay disciplined and just stick to the trading plan itself.
I see. So you said 5%. So you're keeping the other 95% in reserve to potentially add to the position, or?
Yeah, potentially add to the position if I see an opportunity. If I don't see an additional opportunity, I won't use the other capital I have. I just let the trade go, and I just move on to the next trade and the next opportunity.
Great. So are you, so what else are you doing besides just trading for yourself? Do you, are you involved in any groups or, I mean, imagine you've learned quite a bit over the 14 years. Are you able to share any of that knowledge?
Oh yeah, absolutely. Do you still want me to keep my chart up, or?
Oh, that's fine. I mean, either way, whatever's
Okay.
comfortable for you.
Nobody else has any questions or anything that you want me to expand on, or?
Any other questions from the audience? Nope. Okay, continue.
So yeah, when it comes to all the stuff, all the knowledge that I've acquired over the years, so even all the stuff that I've shown just now on the technical side of trading, I would say that getting to understand trading from a psychological and mentality side of things is something that's going to take your trading from here to up here. If you don't have the psychological or the mentality uh, of trading that you need to succeed, you're not going to be able to move past this level. It's just not going to happen. And just to share a quick story, so once I developed this trading strategy, which I would say really, started really honing it in around 2012, and I was nailing trades perfectly. My risk was maybe 50 pips, 60 pips, and I was hitting maybe 500 pips, 600 pips of profit. And in my mind, I'm thinking to myself, this is it. I'm golden. I don't have to. This is it. I'm gonna hit, multiple 6 figures, 7 figures, and things was, gonna be perfect. So at that time, I was working a temporary job at the Federal Reserve Bank of New York, and I quit that job because I was doing very well trading. Little did I know that once you don't have, you don't have that discipline, it's just not going to work. You're going to start making impulse trades. You're going to start making trades that you shouldn't be in. You're going to start cutting positions, adding positions. Once I made a significant amount of money and I lost it all, not necessarily all because of losses, but because I kept withdrawing money from my account every time. I wasn't reinvesting it. I wasn't doing anything with it. I was doing dumb stuff with my money. I all through all that time, I thought about it and I said, trading is really not about just being a perfectionist on the charts. It has to do with being self-aware, and the success that you want as a trader is within you. Everybody has their own reasons why they do things. For example, I was talking to somebody earlier, and when it comes to trading, everybody has a specific reason why they do something. So if you have a problem with risk management, you're sizing your positions too big, there's a reason behind that. It might be, maybe you have bills that you need to pay, and in your mind, if this trade goes right, you can pay off everything. But if the trade doesn't go right, you're going to put your whole capital at risk, and you're going to lose everything. There's always a motivator. It may not be just for that. It may be like, maybe you want to take an extravagant vacation, and you just say, well, if I just put on this trade and it goes the right way, I'll be able to stay in this 5-star hotel and I have a great time. But even if the trade goes right, you're causing your subconscious mind to get used to that type of trading. So you're likely to do it again in the future, and that's going to sabotage you. Eventually, you will lose all the money that you have. So this is why over the years, I've come to that realization. I mean, I'm as hard-headed as can be. I try to stop that fact and avoid it for as long as possible until I just couldn't anymore. And this is the reason why traders struggle so much, is because they don't focus on that part of trading where you got to be self-aware. You might even have to self-talk to yourself. Why am I doing this trade? Should I be in this trade? And if you're thinking too much about it, chances are you shouldn't be in that trade.
Mm-hmm.
So again, I think so many people are so caught up in the social media aspect where everybody's showing these big trades, but nobody's showing the, the downside of that, where you can lose all your capital and, pretty much you're going to start from scratch, depending on how much capital that you accumulated over that time.
Mm-hmm. What is the biggest thing that you currently struggle with?
I would say patience
Mm-hmm.
it's a tough one for me. Everybody has their own rough spot to try to conquer, but I would say, yeah, patience. But again, I have to force myself to be patient because, again, I only trade one pair. I swing trade, which means it's going to take time for a trade to develop, or once I'm in a trade, it's going to take a few weeks for that trade to develop. So I'm forced to be patient. And I
Mm-hmm.
feel that that works well for me, where I have to force myself to be, to get good at that. And yeah, I'm at a point where I don't really focus too much on the technical side of things. I know that if I focus more on the psychological and control my emotions and my psychology, that I'll be, everything else will take care of itself.
Mm-hmm. So, by working on your patience, do you find that it's over time becomes easier to hold on to your winners, even if it takes months to unfold?
Yeah, yeah, absolutely. Once you start seeing that success coming in and you see the
Mm-hmm.
result of you being patient or managing risk or whatever it is that you're trying to work on,
Mm-hmm.
you start getting confidence in it and say, okay, it works, right? It doesn't matter though if you're a seasoned trader, you're still gonna have time to time struggle with certain things. But I try to think about the analogies of trading, and I try to use sports as an analogy where, for example, boxing, even if you go into the ring and you train so well, if you're going in there and you're just throwing, big hooks and you watch, there's no strategy, there's no structure to it. You're not controlling your strategy, you're not controlling yourself. Chances are you're not going to do well. It's the same thing, maybe even like in sports like baseball. If you're swinging at every single pitch because you want to hit a home run, you're not going to be, it's just not going to work out for you in the long run. So I try to have that long-term outlook instead of focusing on trying to hit a home run on every single trade and trying to make as much money as possible in that time. Because if you stick to that plan and you stick to, those principles, things will work out and you will see a progression of success.
Mm-hmm. So you don't, how often do you feel tempted to, uh, jump into a position with this really small position to get your toe in the water, to feel like you're part of the game, versus patiently waiting, for that nice setup? So do you find yourself being out of the market for any long periods of time?
Yeah, and it's extremely hard to do that. It can be really difficult to do that. But again, so just like I showed you on the chart, I use those levels as kind of like psychology for me. Say, okay, if there's no price around these levels, I have no business being in the market right now. There's no
Mhm.
reason for me to do that. No, as much as I want to, that helps me control, those feelings. I wanted to jump into the market and say, okay, because it's going to happen. It doesn't matter who you are. The market may look like it's going to go lower, and then you're like, man, I can, if I get in now, I can try to, get a few, $100, couple of $1,000,
Mhm.
but you have no business being there. You know, it's just one of those things that again, it really comes down to you kind of mastering yourself. It's not the
Mhm.
market. The market's not doing anything.
Mhm.
It's you who's needs to control you and kind of talk to yourself to not get involved in things you should not be, you shouldn't be involved in. So that's the way I try to look at it.
Mhm. So, over the years, have you shared your journey with friends or family, or have any of them wanted you to manage their money, or you offered to manage their money?
Many years ago, I would say 2011,
Mhm.
I did something like that, and I will never do it again. In terms of, well, I knew a lot less back then,
Mhm.
but people would ask me, can you teach me about this, teach me about that? But when I try to explain to them certain aspects of trading, it becomes, I wouldn't necessarily say boring, but it just doesn't seem as intriguing, because successful trading is not what you see on, maybe on a movie or some YouTube video or something like that. It's very structured. It's step-by-step process. And once they really understand it, then they're just like, oh, okay, but it not right nowadays, it's very minimal. People don't, unless they're really serious about wanting to, learn how to trade and make money that way.
So do you find trading, can it be a rather lonely for you? Are you able to share kind of your ups and downs, or do your friends and family know what you do on a daily basis, and the
Yeah.
challenges and struggles you deal with?
Yeah, well, it depends. Everybody has their own viewpoint. Like, I have an uncle who says trading is gambling. I don't want to be involved in the market. So that's one aspect. It can be lonely, but I try to share ideas with communities. For example, on with Trading View, I know I've shared some stuff, chat with traders as well, and try to give back to the trading community as a whole, because I was very hesitant on starting anything like teaching people,
Mhm.
because it's not a really easy thing. You have to really get into people's mind and help them understand the psychological aspect of trading. And just, I know what it's like to struggle so hard and so much that, it's, for me, I felt like I have something of value to help traders along that journey, because it could be very, very difficult if you're losing year after year. You comes to a point where, am I gonna quit, or is it worth it? But I know from experience, a lot of trading is addictive. So it's
Mhm.
not easy. It's not an easy thing to just give up, right? Because you don't want to, you want to make money, right? And then you
Mhm.
see everybody making all this money, and you're like, oh, but what about me? And then you get back into it, and yeah, it sucks you back in. So yeah.
Great. So to wrap things up, is there any final thoughts or ideas you might share to younger traders or less experienced traders?
Oh yeah. So if I had to offer some piece of advice to somebody who's starting out, I would say, number one, try to focus on one thing. Um, Again, I've been trading for, almost now 15 years, right? 14 years and change. If you simplify your trading, that's going to help you focus on, because some people don't realize, whether it's trading or stocks, or you're trading gold, or even nowadays crypto, they have different personalities. So different
Mhm.
price movements. Some are going to be more volatile, some are going to be more stable. It changes. So my advice would be to focus on one thing. If you want to trade crypto, stick to that only and focus on that. Dive deep and focus into that price action, how the market moves, and then you start developing a strategy around that. Because once you start seeing screen time, you start understanding the movements, and how it reacts to certain, maybe strategies, indicators, patterns, and all this stuff, right? So that's number one, focus on one thing. And the second thing I would say is, understand that trading is going to be more of a self-awareness and psychological game. You're going
Mhm.
to have to understand your the things that hold you back, and it's different for everyone. But one of the things that I know that's broad across the board is maybe risk management, and impulsive trading, right? Because people want to be involved in the market all the time. So that's something I would say right from the get-go. Start developing your psychology, and become self-aware of your strengths and your weaknesses into the market.
Great. Thanks, Sal. How can people contact you?
Yeah, absolutely. People can follow me on the Internal Trader. I started business on trading, which is called Internal Trader. They can find me on the YouTube channel, Internal Trader, or they can go to internaltrader.com, find me through there. I'm open always to communication with traders who need help or just want to get in contact with me. And just yeah, those through, they can find me through there. I'm open to discussing trading with anybody.
Fantastic, Sal. Thanks for coming on the show, Sal, with Chat with Traders Community.
Absolutely. Thank you so much
Yeah.
for having me.